And guess what? The change is 0.06% today. So in that sense, and I mean, go back to 2023 as well, I mean, 0.3% lower. So actually, last three budgets, there has been less than 0.5% change on the day of the budget. And actually, even intraday, the moves, I think today the intraday move is about, I don't know, 1.25%, 1.5%. But otherwise, it's been largely, maybe not even 1.5% today. But it's been very quiet on budget days for the last three, and I think now for the fourth budget as well. So I think we are done for the day. Markets ending slightly lower on a very, very kind of a tentative note, but not very much to take away one way or the other. Consumption, the clear leader, and of course the headline from the budget was the personal income tax cuts. And that too not without drama, because as the finance minister initially announced that 4.4 fiscal deficit number, markets assumed there's not going to be too much in terms of help on the taxes front, but she saved the best for the last with that personal income tax relief, which is amounting to about 1 lakh crores or so. From all of us here, it's goodbye. Thank you very much for watching. Prima.
Well, and before we go, let's just quickly tell our viewers that CNBC-TV18 is the #1 business news outlet even on YouTube. It's the most watched channel today on Budget Day among all the English business news outlets. So CNBC-TV18 has clocked in more than 3.3 lakh concurrent views on YouTube. And this is more than 40 times than our competitor. CNBC-TV18 continues to remain your budget headquarters for the last 25 years, and we would like to thank all our viewers for that. Thank you.
The indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable energy and ability of the middle class in nation building. In recognition of their contribution, we have periodically reduced their tax burden. Right after 2014, the nil. I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees. I propose to 1. Remove 7 tariff rates. This is over and above the 7 tariff rates removed in 23-24 budget. The revised estimate of the fiscal deficit is 4.8% of the GDP.
ये बजट एक फोर्स मल्टीप्लायर है। ये बजट सेविंग्स को बढ़ाएगा, इन्वेस्टमेंट को बढ़ाएगा, कंजम्पशन को बढ़ाएगा और ग्रोथ को भी तेजी से बढ़ाएगा।
ये भारत सरकार का बजट है कि बिहार सरकार का बजट है? आपने बिहार के अलावा किसी और प्रदेश का नाम सुना वित्त मंत्री जी के पूरे बजट भाषण में?
The infrastructure is not going for the rest of the country. It's only going towards Bihar because we all know that this year is the Bihar election. So basically, for essence, and Maharashtra has been ignored, and Tamil Nadu, there's not a single word for Tamil Nadu or for any other southern states.
Hello and welcome to this special budget broadcast. This budget puts more money in the hands of the middle class with income tax sweeteners, also stays the course of fiscal consolidation, but only a minor increase in capex outlay. Further, it continues to remain optimistic around divestment but lowers targets for FY26. I'm Prashant Nair. With me, my colleagues Nigel D'Souza and Mangalam Malu. We're also joined by Amit Jeswani of Stallion Asset Private Limited and Pankaj Tibrewal of Ikagai Asset Managers. Gentlemen, great to have both of you here as well. Nigel and Mangalam, thanks very much for joining in. The story of the day, I think, arguably was FMCG consumption. So, Mangalam, just wrap it up for us. What happened and how did the market take it?
You know, the most important thing that happened in this budget was the income tax cut, and as a result of which people have more money in their hands, which they are left with after paying lesser taxes as compared to last year. So just to quote the finance minister, no tax incidence on a person earning up to 12 lakh rupees. You save 70,000 rupees every year if you are earning more than 18 lakh rupees. And if you're earning more than 25 lakh rupees, then 1.1 lakh rupees every year is what you save as against the previous tax regime. All of that made all the consumption stocks, specifically the urban consumption stocks, a lot happier. Why is that? Because over the last few quarters, if you've seen, urban consumption has been hitting a bit of a wall. At the same time, that accounts for nearly 65% of FMCG companies' sales. We've heard from all the managements as well. So companies which benefit from a revival in urban consumption sentiment. You had the likes of Jubilant FoodWorks, Zomato, Avenue Supermarts, maybe something like a Trent, etc. All of them doing well as well. From the discretionary side, even from the staple side, the ones who have higher, salience coming in from urban India, the likes of Nestle, which gets nearly 80% of its revenue from urban India, or GCPL, which is about 70%, Britannia, Marico, all of them recovered from lows. So that was a positive. Add to all these things, the fact that these consumption stocks were under pressure for underperforming over the last couple of years, having come back to their 10-year average valuations as well, and with no incremental benefit or incremental growth coming in or attributed towards capex and railway themes along with defense themes, which have been doing well for the last few years, maybe capital shifts towards the consumption space from here on when it comes to growth from here. So maybe that was the reason. We're going with seize the moment for this budget. Maybe it's time for consumer stocks to go ahead and seize the moment.
Okay, all right, Mangalam, thanks a lot for that. Well, let's welcome our guest, Pankaj, as well as Amit. Thanks, gentlemen, for joining in. Pankaj, let's come across to you first. I think you were hinting to be in the camp that wanted a bit of a capex push. Now we've got a consumption push and maybe a pretty decent capex outlay as well, though I think most on the street wanted a little bit more on that front. Your reading of the budget, and would you jump more into some consumption-related names now?
Good afternoon, Nigel. Our sense is that we went into the budget with very low expectation. We means the market. And there were concerns that there could be some tinkering with the capital gains tax, how the fiscal number maths will add up to. I think the FM has done an excellent job, if you ask me, in managing growth along with fiscal. And the maths we were looking at behind the fiscal and the assumption on taxation seems to be very realistic. So our sense is that there is an impetus towards growth, but this time it's from investment-led to capex, consumption-led. And I think it's very important to take directions from the government. If you remember, Government 1.0 pre-COVID, I think it was all about consumers, middle class, MSME, exports. Post-COVID, the government direction right from day one was manufacturing, infra-led growth, PLI, and government gave a huge push towards it, where 3 lakh crores became 11.5 lakh crores. Now, since June 24, we have started to see indication that this term of the government could be all about the welfare of the schemes back again. And first you saw the 12 states announcing some welfare schemes to the tune of 3 lakh crores, followed by this significant concession of 1 lakh crore in the hands of people. And if it is followed by interest rate cut, most probably in the 6th Feb credit policy, it will clearly show that government first wants to bring growth this time through consumption, which has been beaten down for the last 4 or 5 years.
And I think
market is clearly showing that shift. Maybe too early to take that call.
Right.
But I think normally these things starts to build in over a period.
And I think
my only sense is that when I look at the portfolios across the board, largely it's consumption infra-led right now across the portfolios, because the last 4 years the investment theme has done so well. Most of the portfolios are tilted across the board towards defense, railways, capital goods. And if that continues from a consumption perspective, I think people will have to make that shift. And that shift was clearly reflected today in the market. Maybe next few weeks and months will suggest us whether it was an inflection point and there is a theme change which is happening. I believe it could be that you could be back from value to growth again, and growth this time in consumption, not infra.
Okay, all right. You've been, over the last couple of months, we've chatted, Pankaj, talked about QSR and a few consumption names yourself. So we'll come back on specifics, more specifics in a bit. Amit, your sense for the first time in many quarters, you turned a little cautious. Does today's budget change anything? Pankaj used the word, we'll find out in hindsight whether this was a bit of an inflection point for consumption names. What did he make of it?
Prashant, it was a super budget. It was a time had come in markets where only 10 stocks were growing. Like if there are 100 stocks across consumer, paints, autos, etc. Point had come that only 10, 15 stocks were growing and the rest 80, 90 stocks were not growing well. And too much capital was chasing those 10 stocks. And we were also doing the same thing, to be honest. But that worked very well for us in 2024 and 2025. Of course, money left those stocks because money just wanted to leave everything, and that trade got a little disturbed. But coming back, this is a super budget. While that 12 lakh is the game changer for consumer stocks, I believe there is some sentiment change because if you think about it, paints were growing at 0%. FMCG companies, majority of them were growing near 0%. Even the best retailers were not growing more than 20% in the country. So this is a pivot point where the capex on infra, etc., is the growth of capital outlay is now near 0% YOY. So market chases growth, and markets will keep finding newer places of growth. And looks like consumer after 2-3 years will make a comeback. It will not just be the top 10 companies. I think the entire basket, because the valuation is now not as expensive as it used to be. So hopefully we will make money on both sides. The good part, the companies who are executing in bad times will execute even better in good times, and the companies who are not executing in the good times, the bad times, will have a cyclical kind of recovery of valuation and earnings coming in. So let's see. I'm optimistic. We've had a rough January, but I think February has started on a super rocking note.
All right, February started on a super rocking note. The good part is that February started on Saturday itself. The markets were trading. We'll keep an eye out on how it pans out, when full volumes come by on Monday as well. But consumption wasn't the only thing that we were looking at in this budget itself. It was, the insurance space as well. If you look at the finance minister, she brought cheer to the insurance space as well with an announcement of hiking the FDI into the sector. But at the same time, there were worries about insurance seeing lack of growth because people opted for the new income tax as well because of the relief that came in from the finance minister on the income tax too. Yash joins in to tell us what the insurance sector takeaways from this budget have been. Yash.
Well, Mangalam, three most important takeaways. The first one, as you started with, increasing the FDI, the foreign direct investment limit in the sector, taking it to its optimum point of 100% from the current 74%. The last time when it was raised from 49 to 74, it got very little attention from foreign players in terms of bringing in the capital. But the regulator, the government, was confident that if a complete autonomy is given to foreign players, where they decide how much capital, the business directions, the policy decisions, then that capital will indeed come in. So increase in FDI was the first one, largely positive for the sector and the unlisted players more than the listed players. The second announcement, which was a dampener and which was largely expected also, was the push which will come from the government side on the new income tax regime. Remember, the new income tax regime does not give you any exemptions like the old one under ATC for life insurance and ATD for health insurance. The government said the big thing, which was essentially no tax for an income of up to 12.75 lakhs if exemption or rebate is taken. And that made the new income tax regime a lot more attractive. The fear is that if people start moving from the old tax regime to the new tax regime, then the purpose of buying insurance for tax saving gets defeated, both life and health insurance. Hence, that was the fear, and the stocks reacted to that particular news. Though HDFC Life on the channel said just 2% of their new business premium comes under ATC. For the sector, it is about 5 to 7%. The third one was taxation on ULIP. So far, ULIP premium of more than 2.5 lakhs, the returns which come in were taxed as other income, which gets computed into your income tax, and accordingly slab-wise you're taxed. But here the government has clarified that now it will be taxed as capital gains tax, which is 12.5%, which will be the lower range of tax as compared to the higher marginal rate under income tax.
Okay, all right. Thanks a lot for that, Yash. Pankaj, does this sector now come under your radar? Insurance companies, they were all over the place today. Initially, they saw a big downtick because a lot of people will move to the new tax slab. But then we had clarifications coming in there. Biba as well of HDFC Life did clarify only 2% do fall under that particular bracket. Your view, Pankaj, on insurance stocks?
So overall, Nigel, I think insurance companies are very well positioned. If you look at insurance, when they do well, whenever the yield curve steepens, and I think that's a time when really the insurance companies does well, because the non-par, the protection, the annuity part, they really make money in that. So my sense is that at lower levels, insurance could be a great opportunity from a 2 to 3 year perspective. If our view is that the yield curve is going to steepen from here on. And on 6th of Feb, if the RBI decides to cut rates and there's some steepening in the yield curve, probably insurance is a great play from overall. And valuations have come off over the last 3 years. Insurance as a sector has not given any return. And these are solid franchises from a medium to long-term perspective. And we ourselves are evaluating both the general as well as the life players in this space.
So Pankaj is having a look at that. Amit, does it come under your radar?
So insurance, we don't have any positions as of now. The growth's not picking up. If you look at the entire pack, the insurance pack, the growth has been very mediocre for us to get in. So we've not been we like the marketplace, the market leader, the marketplace market leader, the bazaar here. But that is also a little expensive, and markets have taken the last January, we sold out Policy Bazaar way back, but markets are looking at valuations also very aggressively since January. So you cannot just chase growth. You want growth and reasonable prices both going forward in 2025, 2026. So we let's see, we don't have any positions, or we're not even thinking in those lines. Very complex. Life insurance is a very complex business to understand. It is nobody understands embedded value. At least we don't understand embedded value, how to calculate what futures will look like, because you're taking money in now, you're insuring something that will happen 20 years in the future. It's very, very difficult to understand this
stocks
game.
Basically,
it's very tough. We don't understand it very well. So we only focus on general insurance. That is easier to understand. Okay. But I don't see the growth rates that we need.
Right. Got it. Before we wrap, Pankaj, it's based on one event, it's very difficult to change one's view or kind of, suddenly go into something. As a trader, you can do it in and out and all of that stuff. But if the game this time around, the Saransh, as they call it, out of the budget is more money in the hands of the consumer, it's figuring out where that money will go, right? Amit had some ideas. If you had to pick out one space, could it be, from a listed standpoint, we're trying to connect both. More hands in the consumer, which companies, listed space. So what would those be? One or two areas you think? Briefly, Pankaj.
So, Prashant, always remember that event could be one-off, but inflection points normally come like this. And if you remember 2021, 22, when we started to get positive on the entire investment theme, we didn't know that in the next 3-4 years, the push from both global and local would be towards investment in terms of PLI, in terms of Make in India and others, and government push. Probably would be the time when probably government is indicating to us that the next couple of years could be welfare for the people. So we should not ignore that direction from a portfolio composition and portfolio construction perspective. And coming to consumption, I think it's a broad sector. What we are positive on is the consumer durable segment, home building segment, not so much on FMCG, but retailing, value retailing, and companies which have executed well in the past with a strong brand franchise. Right. And don't forget, Prashant, that many B2B businesses today, which lie in the investment theme, are price to vision, not price to perfection also, but price to vision. And there we need to be a little now careful that there could be significant derating if growth is below expectation in terms of order inflow or the government push towards spending.
If it is indeed an inflection point, Pankaj, and I take your point completely. That's why, as they say, investing is simple, but it's not easy, right? I mean, because something has worked for very long. If something is changing, it's very difficult to make yourself believe that, well, this is it. But that's essentially what I guess you have to do, and you have to believe as well. Mangal, you want to make a point? Sorry?
No, I was just saying that when he said that, it's not a day that makes the market, or it's a period of time. Maybe this is the time for the consumption stock. So I guess we'll just wrap up on this edition.
Okay, all right. Well, we'll have to do that then. Thanks a lot, Amit, as well as Pankaj, for joining in. We've completely run out of time. We'll wrap up on this edition. We'll be back with more news and updates on the other side. Don't go anywhere.
Indirect tax reforms and changes in direct taxes in Part B. Financial sector reforms. The FDI limit for the insurance sector will be raised from 74 to 100%. This enhanced limit will be available for those companies which invest the entire premium in India. The current guardrails and conditionalities associated with foreign investment will be reviewed and simplified. The services of India Post Payment Bank will be deepened and expanded in rural areas. NABFID will set up a partial credit enhancement facility for corporate bonds for infrastructure. Public sector banks will develop Grameen Credit Score Framework to serve the credit needs of SHG members and people in rural areas. A forum for regulatory coordination and development of pension products will be set up. To implement the earlier announcement on simplifying the KYC processes, the revamped Central KYC Registry will be rolled out in 2025. We will also implement a streamlined system for periodic updating. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination.
And the manufacturing sector. Mr. Goyal, how do you think this budget fares in terms of giving more consumption power back to the middle class? Because that had been a pain point over the last few quarters.
Well, it's a very transformational budget. It's balanced. Continuity is evident in the budget, but very strategic in its outlook. It has planned a vision very holistically. Now, the benefits given to the middle class. It straight away results in money in the pocket of the middle class. India has a very rapidly growing middle class with 25 crore poor having come out of multidimensional poverty. You are rapidly seeing more and more people with increasing incomes. Their disposable income becomes much bigger, savings of up to 1 lakh of rupees for all those who are earning up to 25 lakh rupees. And for those who are in a job at 12,75,000 rupees salary, you have zero income tax. I think it's a very, very big message that so far the government had focused on investment-led growth. Now we will have investment-led and consumption-led growth, which is how developed economies of the world have been created. So it's the right pathway to a developed India.
Sir, there was a concern about India's growth going forward, whether there are structural problems. The CA has said that the growth in this fiscal could be between 6.4 to 6.8%. What is your view on what this budget will now do for growth revival for FY25 and FY26?
My sense is this budget and the number of elements it touches, whether it's MSMEs, whether it's farmers, whether it's the youth for creating more job opportunities, our startups, creating the right infrastructure mix, monetizing 10 lakh crores worth of assets for reinvestment into the economy, focusing on ease of doing business, the Jan Vishwas Bill 2 also coming in now, working with the states to get ease of doing business at the state level activated and incentivizing them, focusing on tourism. Now, tourism we all recognize is one of the largest job creators. When we she has look at the minute detail in which she has gone. 50 destinations chosen through a challenge route, but within that, not only will infrastructure be created, marketing will be done. You'll even look at simple things like hygiene and sanitation. Udan supplements tourism. 4 crore more tourists or travelers with 120 new destinations. So that many more airports getting activated, making it easier to reach the destination. Hotels being provided land at affordable prices so that hotels remain affordable. Homestays being given mudra loans now. I can clearly see in this Honorable Prime Minister Narendra Modi's way of working. He always thinks very comprehensively, always thinks out of the box. And actually this budget has to be read in its entirety to understand the interlinkages, how he has connected the dots to prepare India for developed and prosperous future.
I want to speak about the focus on labor-intensive sectors such as leather and footwear. What is the kind of schemes or the policy contours that we are going to now see for support for these sectors? And do you think this is being done with the China Plus One opportunity in mind?
Well, Prime Minister Narendra Modi has always believed in the capabilities of our MSMEs, and it is not only toys and leather. Toys and leather are clearly focus areas where we have a huge amount of success story in our last few years. But he has overall given the MSME sector a big thrust. He has increased the mudra loan limits. He has increased the limits of the very definition of MSME. We are finding that the credit guarantees will be given for term loans, for modernization of these MSMEs. Exporters will be given a thrust with easier finance available. There is a focus on food processing. In a way, when demand gets a boost, particularly through the benefits given to the middle class and greater disposable incomes, when our farmers' income increases, whether it's the focus on increasing their production or productivity, cotton, pulses, even look at the detailing. Makhana is a very nutritious and high demand product. Potential is huge. The farmers who are making makhana, when their product gets processed into a packaged branded product, its value transforms itself. Just like we are seeing in tea, in coffee. Coffee, our exports went up to over $1 billion this year. So his whole idea is how farmers' income can be increased, how middle class can be getting a more disposable income, how the youth of the country can engage with technology, better skill sets. It's an effort to reach out to 140 crore Indians. Nobody should be left behind, is the mantra that Prime Minister Modi follows.
When it comes to duty, sir, we've got the new administration in the US and they have threatened tariffs. They've started with, of course, Canada and Mexico. They will go to China and the feeling is they will impose tariffs on India as well. How are you gearing up and how is that budget, how is this budget making India tariff ready?
Please don't go by feelings expressed by a few people. We have the courage of conviction that our friendship, our relationship with the United States is time-tested. Prime Minister Narendra Modi and President Trump share very deep bonds of friendship. He knows that India is a trusted partner of the United States of America. At the same time, we are wanting to work even closer with the United States of America to expand our relationship, whether it's on bringing back illegal immigrants, whether it's on making sure that American goods get a fair tariff regime in India which does not hurt their business interests, and simultaneously India
stakeholders, and interest of education and health has been prioritized. When we're talking about education, from a child in a daycare center, portion for women, lactating mothers, till the level of getting skilling done, and also for artificial intelligence and digital reading material for students in school and colleges. Every aspect of education, and bringing in that dimension which is so critical for health. Daycare, cancer centers, and making sure more medical seats are available. These are kind of things with which I'm trying to highlight. The approach in this budget has been pointed on areas which definitely need immediate intervention, outlays, and action along with the states. So Vikasit Bharat is not just being described. I've given you also what we mean by Vikasit Bharat, or what is it that we expect to achieve for Vikasit Bharat. So this budget actually has given you several things on which you can understand how this economy is being planned to take forward a route towards Vikasit Bharat. Secretaries have joined me. All of them would also come in to explain or answer and give clarity and so on. But one thing which I certainly would like to highlight is responding to the voice of the people, which is what Prime Minister Modi is known for in his administration. It's a very responsive government. And as a result, the income tax simplification, which I announced in July, is already completed in its works, and we shall bring the bill in the next week. So the income tax simplification, about which in July budget I have gone in detail to say, the work is completed within 6 months is what I said. Within 6 months we've brought the bill. It will be coming into the parliament next week. So if we are talking of reform, inclusive of taxation, the work is done. This budget also speaks about rationalization in customs. Tariffs are being brought down, tariffs are being simplified, and also the basket which consisted of so many different tariffs for so many different commodities are now reduced. 8 were taken off earlier, 8 has been taken off now. So whatever remains now, 7 I think remains, and that is all about India's tariff picture. So the usual narrative which goes on, saying is India being too heavy on tariffs? No, you find that we've drastically reduced and also simplified. So this budget has so many things for all of us to talk about. The more important thing about agriculture, which performed very well during COVID and which has contributed to India's food security, the proposals which are mentioned in this budget actually talk about everything to do with beads to bazaar, literally from the stage of seeds, hybrid seeds, climate resilient seeds, seeds which can give greater output, seeds which are going to be high yielding, all this together to the final point of India becoming the world's food basket. That's the definition I put in when I was talking about Vikasit Bharat. So we are making sure that India's agriculture gets the support across the board, whether it is on seeds, whether it is for skilling the farmers, whether it is rural prosperity, whether it is going to have agriculture and allied industries being set up in rural areas, and whether it is going to be farmers getting better and more loan with interest subvention, not just farmers, fishermen, and also dairy, meaning animal husbandry. So the picture for rural development and the picture for supporting agriculture is across the board, and that has been narrated. The second thing which I would want to highlight is the continued emphasis that we're giving since vote on account budget, July budget, and now on the MSMEs. Whether it is giving them sovereign guaranteed loan, whether it is support during COVID, whether the definition being changed now for better, more inclusive growth in MSMEs, access to bank credit. So MSMEs have also been given greater emphasis. Together with this, I'd like to highlight the point that energy security has had greater attention in this budget. We've highlighted in July budget how even pump storage will have greater attention. Solar and wind and renewable energy has also been taking consistently good importance in our budgets. This time we are talking about the small modular reactors. I've also announced that there shall be 2 amendments, one to the Atomic Energy Act and the other one for the civil liability. All of this is going to help us attain energy security. Insurance sector's FDI limits have been enhanced. That is another important announcement. I'll end my opening statement with 2 things. There is no reduction in the public spending on capital expenditure. Let's put that up front. We continue to place emphasis on the multiplier effect that capital expenditure done by government has shown, has sustained us. We continue on that. And with all this, our fiscal prudence has aligned itself to the glide path that we announced in 2020-21. So we've kept ourselves in alignment. Fiscal prudence has been maintained. The next year, coming years, estimate has also been given. Well under 4.5 is what we had said earlier. We are also projecting the same. So this is just as an opening statement. There's a lot more to say. But as you all ask questions, so shall we answer. Thank you.
Thank you, ma'am. 225. 225. Mic, please.
Ma'am, this is Shrimi Chaudhary from NDTV Profit. I just wanted to understand, ma'am, here. Ma'am, you said the new income tax bill will come next week. Will that be in the form of draft, and where you are also going to take stakeholder comments on that?
Yes, as a bill, any bill goes to the standing committee, and the standing committee will, of course, consult with so many stakeholders. And then it will come back to us, and if necessary, any more amendments, if need to be brought in, we'll bring it in and take it forward in the House.
So do we expect implementation in this, in the fiscal year, in FY26?
Do you expect what?
Do we expect the implementation of...
Well, let it get passed. I hope it will get passed without much of a difficulty, but it is only after it's passing.
Sure. Thank you.
35. Front.
Ma'am, Timsi Jaipuria, this side from CNBC-TV18. As you said, this is a very responsive government, which is why government decided to give these tax rebates. But given the structure that you have announced, ma'am, up to 12 lakh is the rebate. Any reason why this rebate has been hiked from 7 to 12 lakh? Is it that the incomes or salaries were not growing up to the mark, which is why government thought that this rebate needs to be given? And also, how do you make up for this 1 lakh crore of revenue loss? Will it not impact the budget estimates? Where will you get this money from?
Well, Gypsy, I think the first question is, you said that this, when the incomes are not growing. This is an income tax. Only when there is an income, then we are talking of the tax. So income has to grow to the level to discuss about the tax. Now, why from 7 to 12 lakh? It is something like, it was earlier 2.2 lakhs. When 2014, it became 2.5 lakh, nobody is going to pay tax. Then there was a 2019 that, we said 5 lakhs, nobody is going to pay tax. Then we said it was raised to 7 lakhs. And now it's being raised to 12 lakhs. So this is a perception that the government feels that, on the average 1 lakh per month, if you have, then you need not pay tax, which means that, we are doing it in 2 ways. One is we are reducing the slab rates. We are expanding the slabs. If you would have noticed, the slabs are now 0 to 4, 4 to the uniform slabs, and there is a gradualism. There was a thing when we had earlier 20%, then it was jumping to 30%. Now it is 20, we have introduced 25 also. So it's the gradual thing which has been done. Now this benefits every one of the taxpayers, because whatever benefits which has come from the slabs gets transmitted across. So therefore everyone gets a benefit. Now the second part, FM decided that, well, some people should get a little more benefit than merely slab rate reduction would have given. And so therefore an extra rebate, so slab rate reduction for everyone, and extra rebate for 7 lakhs were already getting it, now 7 to 5 lakhs more people have been added. So this is the philosophy behind it. And as you said, why you do it, I think we expect that all that money which they gave, it comes back to the economy in either consumption, savings or investments, in whatever way they choose to do.
I just want to add to that. If you compare what we've done today with what prevailed in 2014 under the Congress government, what we are, most often the narrative is we should put money back in the hands of the people. I want to please give this comparison for your consideration. If you compare it with the 2014 tax rates under the Congress, for somebody who's earning 8 lakhs, nearly 1 lakh more money is in their pockets today because of the amendments that we brought in. Meaning, 1 lakh income tax in 2014 is 0 income tax now. So that money is going back to the people in their hands for those who are earning 8 lakhs. For those earning 12 lakhs, 2 lakh was the income tax in 2014 versus today 0 which is proposed. Meaning nearly 2 lakh more money in the pockets of people who are earning 12 lakh. All right, did I stop it there? As Finance Secretary rightly said, across the board everybody is getting benefit because the rates have also been brought down. Not just the rebates being given to up to 12 lakhs. Rates for everybody is being brought down. As a result, take somebody who earns 24 lakhs in a year. The income tax on them in 2014 was 5.6 lakhs. 2014. For them, now it is only 3 lakhs. The rate change has benefited somebody who earns 24 lakh as well. So 2.6 lakh rupees more in the pocket of people who are earning 24 lakh. So it is not just those who are up to 12 lakh because they are not paying any tax at all, because rebate is given to make up for the tax amount which they have to pay. It is not just up to 12 lakh. Even for others, benefit is accruing, and compared to what it was in 14, that much amount of money is going back to those respective money earners. Just compare it with 24 tax rates, which is prevailing now and what is being proposed. I would like to draw the comparison. 8 lakh people, meaning those who are earning 8 lakhs. 30,000 rupees more is being put back into their pockets, meaning they would be paying 30,000 in the prevailing tax, 8 lakh salaried wale. Now they pay 0 in the new proposal. Similarly, 12 lakh salary or income wale would have 80,000 rupees tax to pay in the current prevailing taxation rates. They would have 80,000 rupees now go back to their pockets. They don't have to pay that tax. Go to the 24 lakh and compare with the present rates. Present prevailing rate, they have to pay 4.1 lakh rupees as tax. We are saying now they will have 1.10 lakh in their pockets, which they don't have to pay as tax. So we have put good substantial amounts into the pockets of people who deserve to get that. And I would want that to be highlighted compared to what prevailed in 14 and what prevails just this year.
3. Yeah, 3 number.
Ma'am, many congratulations. Something that was being quoted to you as well as the Prime Minister and yesterday the Chief Economic Advisor hinted, in terms of disinvestment and where you should not get into, government. You yourself have been talking from 2020, 21 and subsequently, government should be in less spaces. Has it been a strategy? Because I know you're committed to it, but last budget you didn't refer to it. This budget you have not referred to it. The target still remains there. Is there any impetus that you're going to do towards what has already been announced by the budget? For example, bank nationalization, privatization of banks and others. That's one. And the second because that was unanswered, you're making it simpler, the income tax, and bringing a thing. Does this mean that you can now not necessarily all the time you can do it through a schedule or an executive order if you want to give some relief to a common man in the new income tax bill that you bring in?
No, giving relief any time will have to go to the parliament, because if we are giving fiscal relief to people, it has to have approval from the parliament. But what the tax simplification really means is the complication in the language, the circuitous way in which they were explaining things, and adding too many exemptions. You will realize that when we brought in the new tax regime, we didn't want the old tax regime imitated or copied. In that, there are several exemptions given in the old regime. In the new, we didn't want to give any, because we wanted a simple, straightforward tax regime in which the rates can be brought down. That's what we've done even now. So the act itself had to be simplified. The attempt now is that.
Okay. And on the disinvestment and...
No, all that will continue. There won't be a relenting on any of this.
On disinvestment, ma'am, if I can add, you see, the last time, July, also the similar questions were asked. We have actually since then, a value creation strategy, which was actually well explained at that time also. There is no disinvestment target per se. Disinvestment and dividend are both looked at together, because both are money and money is fungible. And it has got 5 elements. The first element is that we are saying CPSC's performance. The second is we say that we should have communication of performance. The third we say that the capex of the CPSC, which is important, as you know, in terms of accelerating growth. The fourth is the consistent dividend policy. And the fifth is there is a calibrated disinvestment strategy. And the disinvestment also is there. The listing is a part of disinvestment itself. So if you really look at it, both dividend and disinvestment is about 80 to 90,000 crore per annum are being raised, but in a manner which are beneficial to the minority shareholders who are there in all our listed companies.
65, backside.
Good afternoon, ma'am. This is Ruchi Bhatia from Bloomberg News. I have a question for the Revenue Secretary and a question for you. If the Revenue Secretary can give us details on the benefits, the number of people who will benefit from the slab, from the rebates going up from 7 lakhs to 12 lakhs. And the question for you, Madam Finance Minister, a lot of people say that while the absolute number for CAPEX has gone up, the pace of spending has gone down as compared to a few years ago. Is it telling of the institutional capacity in terms of how much CAPEX push can the government really do? And secondly, as far as a lot of analysts do say that the multiplier that CAPEX has is a lot more than the multiplier in the economy than that tax cuts have. What would you say to some of those concerns as well?
Well, 1 crore people will more benefit between the 7 lakh and 12 lakhs.
Meaning 1 crore more people will pay no tax. On the CAPEX, I think there are 2 things playing out. One, of course, this particular year has had the elections happening, and because of that, both central government and state governments were catching up with investments, public spending on investments only from the second and the third quarter, so it showed. It's equally true that when fundamental requirements are taken care of, when you're bringing in additional overhead, there is a pace at which those additions happen. So it's not as if there is no thirst for capital expenditure, but now it'll be at a pace in which you can build on each one of the developments that you've done prior. So it'll continue. There are some departments which will need more. There are others who would probably reach a plateau, but expenditure will have to continue even in them. So the heads where the capital expenditure will happen will vary, but expenditure will happen in building assets.
121.
No, capex is also continuing. I have not foregone capex to give for revenue expenditure or consumption expenditure. So both continue. Ajay.
Look at what the overall numbers are. Even in the coming year, the next year, effective capital expenditure, including what Government of India provides to state for their capital expenditure, is 4.3% of the GDP, one of the highest. So it's not just what Government of India departments spend, it is the total money which goes for the capital expenditure. And if you look at that compared with this year's RE, there will be 20% increase. If you look B to B, still there will be a 10% increase. And it is not a capacity issue, it is a new sectors coming up. For example, if you notice, urban sector, the allocations are increasing. That's one area which requires a renewed focus.
121.
On the capex, because this point can come up later also. So one is the capex that we give directly, that is we do as central government directly. Other is that grants that we give to the state governments for the state governments to do capex. For example, for Pradhan Mantri Gram Sadak Yojana, for example, Pradhan Mantri Awas Yojana, and so on and so forth. So if you also include the grants and aid for creation of capital assets, the amount, total amount has gone up to 15.48 crores in the budget estimate for the next year, which is more than 15% increase over the current year's RE. So that is a substantial increase, whereas you consider that the overall expenditure, that is revenue plus capital, has grown by around 7% in the next financial year as compared to this year's RE. So this is almost twice the aggregate growth in the expenditure.
Yes. I would like to also add that on top of this 15 lakh crore capex, which is 11.2 there, and the extra money which goes into revenue but goes in capital building at the hand of the states, the CPSCs, the Central Public Sector Enterprises, add about 4 lakh crore as capex from their own resources. So that's also the capex which goes in, and that is not counted here.
Mike on कर.
तरुण शर्मा फ्रॉम जी बिजनेस। मैम मेरे दो सवाल हैं। एक, मैम आपने इंश्योरेंस की जो एफडीआई लिमिट है वो 74 से 100% करी है, तो क्या मैम जो इंश्योरेंस अमेंडमेंट बिल था उसकी जो बाकी रिकमेंडेशन है उसको रिजेक्ट किया गया है, सिर्फ इसी को एक्सेप्ट किया है 74 से 100% का? दूसरा मैम, मूडीज़ ने कहा है कि जो पब्लिक डेट है स्टेट और सेंट्रल का वो अभी भी 80% है, इस वजह से हम रेटिंग अपग्रेड इस बजट के अनाउंसमेंट के हिसाब से नहीं कर सकते। तो डू यू थिंक इज देयर कंसर्न फॉर द ऑन द public debt?
Insurance? Yeah. See, now, presently the insurance is 74%. Now, fundamentally, whether it's 74% or 100%, the materially doesn't matter. But what actually matters is the psychological feeling that they can actually own the company 100%. Along with this FDI, we are also going to, FM also announced that we are going to simplify certain procedures and rules that we frame, which are including the key management personnel, person who can be chairman of the company, and person who can be the CEO and board of directors, and also repatriation of dividends. All those are part of this, the proposed reforms that has been announced by the FM today.
And sir, what about the other recommendation on the draft insurance amendment bill, sir?
That's what we are actually bringing. The draft insurance bill is the one FM has announced, but the main point she has mentioned that 100% FDI, including simplification of existing rules for FDI investing.
The draft bill is also coming.
Is coming.
Yes. And then the public debt, ma'am, on the public.
Serial number 2.
Finance Minister has also announced, just answer complete his question, the roadmap for fiscal consolidation by the center, and please have a look at the FRBM statement which carries the different scenarios, and over a period of next 6 years how that will be brought down. Similar work has to be done through the state governments as well. So it is a process which is on.
Number 2.
Hello.
नमस्कार मैम, मैं आलोक प्रियदर्शी हूँ CNBC आवाज़ से। मैम मेरा सवाल है कि मिडिल क्लास के लिए काफ़ी बड़ी राहत है, 12 लाख तक जो टैक्स छूट दी गई है। इसमें आपने बजट स्पीच में कहा जो कैपिटल गेन से लोग कमाई करेंगे उसको इसमें शामिल नहीं किया गया, उस पर नॉर्मली टैक्स देना पड़ेगा जो स्लैब के रेट से है। तो ज़्यादातर लोग आजकल मार्केट में इन्वेस्ट करते हैं, उनको लॉन्ग टर्म इन्वेस्टमेंट होती है, उनको कैपिटल गेन्स होते हैं कई तरह से, उनको बाहर रखने का, उनको केप्ट असाइड रखने का क्या रीज़न है, क्या उसके पीछे वजह बताएं?
रेवेन्यू सेक्रेटरी उसके ऊपर ज़्यादा विस्तार से बोलेंगे। बाहर रखने वाली चीज़ नहीं है, इनकम का कैलकुलेशन कभी भी वैसे ही होता है, उसमें कैपिटल गेन्स का जोड़ते नहीं है। मैं स्पष्टता के लिए उसको जोड़ रखा है उधर सेंटेंस पढ़ने के समय। ये नया मेरा पद्धति नहीं है कि इसको अलग रखो उसको अलग। इनकम कैलकुलेशन इन जनरल is done without the capital gains. You want to explain it, please?
कि कैपिटल गेन्स टैक्स जो है वो हमेशा से रेट से अलग है, नॉर्मल इनकम से अलग है। यदि नॉर्मल इनकम में होता, शामिल होता, तो यदि 30% के ब्रैकेट में कोई होता तो उसके कैपिटल गेन्स में 30% टैक्स लगता, तो वो क्या मान्य होता? तो कैपिटल गेन्स को एक अलग टैक्स की व्यवस्था की गई है जो कि कम है। वो इसलिए की गई है कि रिस्क उसमें है और उसमें लोग रिटर्न करते हैं कैपिटल मार्केट को बढ़ावा देने के लिए, तो उसमें 12.5% हमने टैक्स लगाया, तो वो एक अलग रखा जाता है। उसमें एक अलग एग्जेम्पशन लिमिट भी है। यदि वो एक साल में कैपिटल गेन्स आपको इज इट 1.25 लाख 1.25 लाख यदि हो तो वो एग्जेम्प्ट भी होता है, तो और यदि शॉर्ट टर्म हो तो वो 20% होता है, तो वो एक व्यवस्था अलग है। और नॉर्मल इनकम की व्यवस्था है जो कि स्लैब रेट और उससे काउंट होती है, तो इसलिए वो अलग ही है। कंफ्यूजन ना हो इसलिए वित्त मंत्री जी ने स्पष्ट उसको कर दिया था स्पीच में, क्योंकि ये कंफ्यूजन की संभावना थी कि सब लोग ये समझेंगे, तो उसको स्पष्ट किया गया।
46 पीछे बैक साइड एक करके।
Hello ma'am, Harsh Kumar from Business Standard newspaper. Ma'am, since government has decided to move ahead with a comprehensive asset monetization plan, so what are the new changes from the previous one, and if you can give some broader aspects of it in detail?
See, as we are aware that till the last year, the first program which was launched in 2021, achievements have been of the order of about 90%, which is a good progress. Based on that success is the next leap, almost double the amount which are coming up. And there are newer asset classes will also be come up. For example, transmission assets, and not just of the Government of India. Government of India doesn't own, say, power corporation, power transmission corporation, but state government's assets are also there. So they will do the monetization, and you will hear very soon that entire plan will be out.
Sir, can we, in future, can we get a separate number of asset monetization and disinvestment?
See, this money, what the intent is, there's already an investment, or rather the assets are there, which may be owned by Government of India, which may be owned by, say, NHAI, or they may be owned by one of the PSUs. They disinvest, not disinvest, they monetize that asset and use that money to build a fresh or a new project and a new asset, plow back that money back into the economy. So these are not necessarily money coming to Consolidated Fund of India. Very rarely the money comes in. NHI doesn't invest, money remains with them, they build another road by using that money.
13. Front.
Hi ma'am, good afternoon. I am Kriti, I'm from Informist Media. So right now you just said that your fiscal prudence has finally aligned with your glide path that you had announced in FY21. This year you have given a new roadmap, so mentioned debt to GDP roadmap. You aim to bring down your debt to GDP ratio to 49 to 51% by FY31, considering the nominal GDP would be in the range of 10 to 11. So based on that, and you said that you will peg your fiscal deficit in a way that it goes on to bring down your debt to GDP ratio. So is there a rough estimation of what kind of fiscal deficit you may have by FY31? And secondly, on 31, when you aim to bring down your debt to GDP ratio. Secondly, on funding of fiscal deficit for the next fiscal year, you have brought down the borrowing from small savings from considerably low. It's 16% low from last year. is there any reason for the limited optimism? Earlier, it used to finance 25% of your deficit. Now it's going to finance 22% of your deficit. So if you could just elaborate on if there is any reason for that. Thank you.
First of all, that what is going to be the fiscal deficit in nth year from now? The path is very clear that debt to GDP ratio will be on a declining path, depending upon what the growth rate in the economies are, what kind of a stimulus measure or a further consolidation measures would be needed. And the roadmap does envisages three scenarios: mild, moderate, and high level of consolidation. So do your math there, that the range is coming up. In the best case scenario, the highest growth rate and highest level consolidation can go as low as 47.5%. Very low growth rate, etc., it comes to 52. What the goal is taken is 50 plus minus 1%, and that's showing that physical response to needs of the economy. So that is the goal, but overall trend has to be declining trend. And just see the record. 2021, Finance Minister announced will come down to 4.5 next year. This year we are 4.8, next year is 4.4. So this is a track record, that's what we follow. Your next question?
Small savings, borrowing from small savings.
Here the interest rate, if you notice in the last 2 to 2.5 years, are being set in a manner so that there's neither an incentive nor a disincentive to come to small savings. These are the numbers where we see the trend, and based on the trend we project it. What is being overall is being monitored and watched or said is the overall fiscal deficit, overall borrowings. If more is coming in small savings, less from the market. If less is coming from the small savings, more will be from the market. So our assessment numbers are slightly lesser than this year, and to that extent market borrowings we have indicated, which will be slightly less than the current year numbers, marginally lower are there. But if there were to be more inflow of small savings, to that extent market borrowings will go down. And as you are aware, we do set the calendar every half year.
51.
Hi, ma'am. This is Vikas from The Hindu. First of all, you've left us with very few questions after that announcement on the direct taxes front. And you mentioned that there is a 1 lakh crore, revenue foregone from that move, which is obviously going to help boost consumption and demand and private investment in turn. I wanted to get a sense of the mathematics behind the overall fiscal math that we've worked out for next year. Because despite this tax relief, we are looking at a direct income tax as receipts as a part of gross tax receipts are likely to rise to 33.7% as per the revenue receipts plan, and which is the highest ever, and marks a significant increase over the 24-25 income tax receipts. So I wanted to understand what's what gives, how do you work this out? Because on one hand we are giving away significant relief. Where do we expect the gains from?
I hope you're not suggesting we shouldn't have done this. Are you? I hope you're not suggesting that we shouldn't have done this income tax, giving money back to people through rebates and other ways.
No, I'm just curious where we expect the buoyancy coming from.
That's fine. All right. It was answered at that time. Anyway.
Okay, let me just see. We are talking about personal income tax, taxes on income. And we had 19.7% growth in 22-23. We have 25.4% in actual terms, and 23-24, we had 25%, and 24-25, if you take the RE figures, growth is likely to be 20%. And what we have proposed for 25-26 is a growth of 14.4%. So we have moderated. I mean, we have been growing 20% almost on this plan, and we have made it 14%. Now, coming to buoyancy, our buoyancy was for the taxes on income was 2.65 in 23-24. And 24-25 expected buoyancy is 2. And the buoyancy which has been assumed for 25-26 is 1.42. So you would see that we have assumed a moderate buoyancy looking into the sacrifice of revenue which has been done. So we have done our math. Thank you.
9.
third row.
Good evening, ma'am. Considering the government's measure to put more... Sorry, this is Chetan from Business Today. Considering that the government's measure to put in more money into the hands of the public, are you trying to mitigate the impact of a possible Trump tariff trade wars from the US? Or are you relying more on domestic production to ensure that Indians have a shield from the US trade wars if they happen to be so?
Well, I don't think we've gone that far to justify this income tax rate reduction. We've responded to the voice of the people and also made our own assessments, and therefore we've given this. And I thought there was an allegation also that we didn't respond to what may come through the US administration's tariff whatever decisions. Well, I don't think these two are connected, at least in the way in which we like to believe it. You may want to give a different dimension, but no, we have not done it with that intent.
64 at the back.
मैडम नमस्कार, मैं महावीर सिंह बोल रहा हूँ, फ्रीलांसिंग करता हूँ। आपने इनकम टैक्स में बड़ी राहत दी है, हम तो 10 लाख की उम्मीद कर रहे थे, आपने 12 लाख कर दिया एकदम। और मुझे लगता है कि क्या सरकार इनकम टैक्स रिजीम से हटकर एक्सपेंडिचर टैक्स रिजीम की तरफ जा रही है? जो आप इनकम टैक्स में आपने कहा कि इस राहत से 1 करोड़ लोग इससे बाहर हो जाएंगे और इसमें कम ग्रोथ होगी, और दूसरी तरफ आपका जो टैक्स रिसीट है वो बढ़ता जा रहा है, पूरे बजट का आकार बढ़ रहा है, तो सरकार क्या एक्सपेंडिचर टैक्स की तरफ ज़्यादा झुकाव इसका दिख रहा है?
ये सिर्फ आने वाले साल के, मतलब अभी अप्रैल 1 से शुरू होने वाले साल के टैक्स प्रपोजल्स है। आप पिछले साल का रेवेन्यू को देख करके इससे ये कनेक्शन मत निकालिए। हम जनता के लिए, मिडिल क्लास के लिए राहत दिलाने के लिए प्रधानमंत्री जी के आदेश के अनुसार रेट रिडक्शन किया है, उतना ही है उसमें।
47.
Just to add that point, to give you a data point, direct taxes are supposed to increase by 12.7% next year. Indirect tax, which is on the, say when people buy goods and services, is expected to increase by 8%. So that should answer your question.
Yes,
just
हमारी सेंट्रल अमाउंट शामिल है।
एक इसी पॉइंट पे और यदि हम देखें डायरेक्ट टैक्स और इनडायरेक्ट टैक्स का रेशियो, तो वर्तमान साल में आरई में ये 1.39 है, मतलब डायरेक्ट टैक्स लगभग 139% है इनडायरेक्ट टैक्स का। अगले साल ये 145% है, तो जो आप कह रहे हैं उसका उल्टा है, डायरेक्ट टैक्सेस पे अधिक अगले साल राशि प्राप्त होगी एज कम्पेयर टू इनडायरेक्ट टैक्स।
और यदि हम देखा जाए बॉयंसी जो है वो इनडायरेक्ट टैक्सेस में 0.82 है, क्योंकि कस्टम्स जो है वो कोई अभी हमारे लिए एक रेवेन्यू का साधन नहीं है, वो एक बॉर्डर मेजर्स है, और बहुत समय में हमने ड्यूटी रिड्यूस भी की हैं, क्योंकि बहुत ज़्यादा हाई टैरिफ लगाने से भी उसके ठीक परिणाम नहीं, तो ये भी नहीं है। और CGST और सेस में हमारा जो बॉयंसी है वो सिर्फ 1.08 है, तो आप देखेंगे कि वो उसमें कोई एक्स्ट्रा हमारा करने का विचार नहीं है।
Ma'am, Prakash Predarshi from ET now. Yeah. The KCC limit has been enhanced to 5 lakh. So any assessment on how this decision will boost rural consumption? Secondly, ma'am, the budget document mentions something about sharing transaction details of crypto assets. If you could elaborate.
Sharing transaction details of?
Crypto assets.
Okay. Nagaraj, you want to say on the KCC? Increase in the KCC.
Yeah. This
Let me respond to the question on the KCC. This is to enable those farmers who are doing commercial cropping, they require more more crop loans are required. It will facilitate them, and government will provide the interest subvention for them up to limit of 5 lakhs. It is not first to assist the farmer It is not a measure to boost rural consumption. That is not the intent. The intent is farmer needed more crop loans. It is to facilitate that. That is the purpose.
And 1 lakh, it's been decided long time ago. High time it was changed.
The KCC loans are given at the 7% rate of interest. It's already subsidized by the government at 1.5%. Now, if the prompt repayment is there, there is another 3% to the farmer. The effective rate of interest on KCC loans is only 4%. Now, with the current announcement by the FM, there will be almost about 26 crore additional budgetary impact for this KCC loans.
45.
जहाँ तक क्रिप्टो का सवाल है, अभी हम क्रिप्टो पे टैक्स लगा रहे हैं, although it's not a regulated entity. जैसे ब्लैक मनी में भी टैक्स लगता है, तो उसी तरह से क्रिप्टो में भी टैक्स लगता है. नहीं, मतलब रेगुलेशन ना होते हुए भी इट इज़ टैक्सेबल. उसमें OECD G20 के अंडर जो हमारा फ्रेमवर्क एग्रीमेंट है, उसमें 2027 से ये निश्चित किया है कि सब जो उसके सेक्रेटरीज हैं वो उसमें इंफॉर्मेशन शेयर करेंगे. तो उसके लिए टैक्स लॉ में ये व्यवस्था की जा रही है कि हम वो इंफॉर्मेशन गैदर करने का फ्रेमवर्क, जो रूल्स हमको बनाने हैं, वो हम कर लें.
Ma'am, Meghna Mittal from Money Control. The union budget has announced a big income tax relief in the new income tax regime.
Where's Meghna?
The budget has announced a big relief in the income tax, so in the new income tax regime. So how many taxpayers have moved to this new income tax regime, and does this also mean that are we phasing out finally the old tax regime?
75% जो हैं, 75% have already moved to the new tax regime under the individual category.
No, if we are phasing out, I would have said it, na?
The scheme is available, but we expect that almost everyone will shift now.
224.
Good evening, ma'am. Shishir from Hindu Business Line. One of the popular scheme has been sovereign gold bond scheme. We have not seen any of the issue during the current fiscal, and we are not getting any mention for the next fiscal. Does this mean that there is a curtain to this scheme?
Well, yes, Ajay. Yes, in a way. But Ajay can give you the detail. Yes.
See, these are the decisions which are taken. What the purpose is? One, of course, is to raise borrowings from the market for the purpose of financing the budget, and at some point of time whether this asset class is to be supported or not. But the conditions of the recent past with the experience has been that this has been rather a fairly high cost of borrowings for the government. As a result, for the last several quarters, government has not chosen to follow that path. As and when a formal decision is there, you will get to know.
Please go on.
223, left side. We'll take two more questions.
Hello, hi.
After this.
Ruchika Chatravanshi from Business Standard. Just two things. One, if you could elaborate on the BIT that you've said that it will be made investor friendly. So will it be in the line with what we have with the UAE? And one, there is an increase in the corporate tax revenues also that have been projected in the FY26 budget. So what is the reason for you to, why are you expecting like a revival in corporate tax, which has been a bit of concern?
Well, on the BIT, I think I've stated the reason why we want to revamp it, to make it more investor friendly. Yes, I can understand you quoting UAE and asking whether it is going to be in line with that. UAE was a bit more than, it was 2016 plus, it was more than the 2016 version of the BIT. But there is no particular template that I'm adhering to. We want to make it lots more robust and lots more investor friendly.
125.
Ma'am, good afternoon. Karishma from Business Today. Congratulations to you and everybody. Ma'am, Manrega has again, it's seen a stagnant allocation in the last 2 years, despite that this year's FY25's utilization has already peaked until December.
Do you expect a mid-year revision? And ma'am, a quick clarification on crypto. When is the DA-led crypto paper likely to be released?
See, on Manrega, I think every year the same question is asked, and every year we answer the same question. It is a demand-driven program. If, as a result of increased demand, a state or another state, a third state, wants money because their demand has to be met, the RE shows the numbers and we increase it. But just because of that, it doesn't mean that my BE will have to be on the enhanced note. Every year the numbers, in fact every crop season, post the crop season, the numbers vary. So as a demand-driven program, we'll certainly respond to it as and when the numbers come. On the crypto, when is the DA paper likely to come? You'll get to know when it comes out.
This is last 6 at the back.
Ma'am, I'm Banikinka Patnaik from the Economic Times. In your speech, you have said that there would be a light touch regulatory framework and that a committee will be set up to review all non-financial sector rules and regulations. So, ma'am, is there, any possibility that it will also include financial sector regulations?
But even as I read the speech, there were two different things. One for the non-financial and another for the financial. The financial is still being looked through the FSDC, whereas the non-financial is where we have appointed, or we are asking for an appointment of a high-level committee which will look at the regulations, particularly for compliance, for inspection, for certification. There are ever so many overlaps, friction points, pain points. So to sort that out, our approach is this: one, through the FSDC for the financial, and for the non-financial, several of them which are non-financial, the high-level committee.
Ma'am, again, in the nuclear energy space, there is an announcement that there could be more private participation sought. So, is there any particular frame in mind that how we are going to do it, or any incentives or something of that?
No, what I've announced at the moment is what stands, and the respective departments will go into the details, and they'll come out after the year commences.
Thank you, ma'am. Thank you for that.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com. The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com. The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. at these times, only on CNBC-TV18 and CNBC-TV18.com. The last hour. Anything can happen between the bells. But
presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. Presently, taxpayers can claim the annual value of self-occupied properties as nil only on the fulfillment of certain conditions. Considering the difficulties faced by taxpayers, it is proposed to allow the benefit of 2 such self-occupied properties without any condition. To streamline the process of transfer pricing and to provide an alternative to yearly examination, I propose to introduce a scheme for determining arm's length price of international transaction for a block period of 3 years. This will be in line with global best practices. With a view to reduce litigation and provide certainty in international taxation, the scope of safe harbor rules is being expanded. A number of senior and very senior citizens have very old national savings schemes accounts. As interest is no longer payable on such accounts, I propose to exempt withdrawals made from NSS by individuals on or after 29th August 2024. I am also proposing to allow similar treatment to NPS Vatsalya accounts as is available to normal NPS accounts subject to overall limits. The middle class provides strength for India's growth. This government, under the leadership of Prime Minister Modi, has always believed in the admirable
Hello and welcome to CNBC-TV18, India's budget headquarters, as we decode what Budget 2025 has delivered. Finance Minister Nirmala Sitharaman presenting her 8th consecutive budget, and it's been a record-breaking budget for many reasons, not just because it is her 8th, but also because she has delivered on the promise of providing relief to the middle class. We had gone into the budget with the focus on the 3 C's, capex, consumption and consolidation, and the budget has managed to deliver on each one, but consumption clearly has been prioritized in Budget 2025. Joining us now is the top brass of FICCI, Harshvardhan Agarwal, Anant Goenka, Shubhrakanta Panda, and Naina Lal Kidwai. Naina, gentlemen, appreciate you joining us here on CNBC-TV18. Harsh, let me start by asking you, as I pointed out, prioritizing consumption, giving in tax relief, much more than perhaps what was expected and anticipated. On balance, your big headline from Budget 2025.
Thank you, Shireen, for having us with you. Yes, I think, the tax relief up to no tax till 12 lakh, that's a very welcoming step, from the finance minister. Yes, it has been the expectation from the industry as well as, our recommendation from FICCI to the government that yes, we should give some relief on tax for the middle class. But yes, we were not expecting, to the level of 12 lakhs. So it's a very welcoming move, and certainly it will help the overall consumption.
It will help overall consumption. That's the hope, and that is what the budget promises to deliver on. But Anant, let's talk about capex, and perhaps it is short of industry's expectations. But as I've been pointing out, the government has been signalling the fact that capex has perhaps peaked at that 11-12 lakh crore rupee number, coming in at 11.21 lakh crore rupees. Both on capex as well as consumption, the dual power of what that could mean for growth.
Yes, we hope for about a 15% increase on the 11.1